Let's turn our attention now to a part of the market that we have not touched on all too much over the last 90 minutes or so, and that's what's been happening in the currency space. And for more on that, we're joined now by Simon Harvey. He's an FX market analyst over at Monex. We're also joined by Yahoo Finance's Brian Cheung. So Simon, let's just start with, I guess, the major moves we've seen in the last 12 hours and the magnitude of those, I suppose, relative to what your expectations were, how investors seemed positioned heading into this event.
Thank you for having me. And I think it's a very apt time for Julie to sit there and actually giggle at the idea of us not looking too much at polls going forward, because it's made a very long night just for everyone in the market, not just in the FX space. And if we're going to speak about how currency markets have been playing it, they also got tied up on this idea that they were front running this kind of blue wave going into the election and were almost caught wrong-sided by it. The dollar has been trading very mixed throughout the session. It was caught up in this blue wave idea. There was a kind of a very broad risk-on environment. Currencies in the G10 and emerging markets were really enjoying this idea that there's going to be a big fiscal stimulus package coming through in the US. Global growth outlook's going to take a bump higher, and all of a sudden, everything's going to be quite nice and plain sailing. There's not going to be the idea of a constitutional crisis in the US, and implied vols started to take a bit of a dive overnight in option markets for this exact reason. Then all of a sudden we had Florida, and this is where everything started to change. Where the Florida result was kind of the catalyst of the switch, and then we saw it filter over into how Texas played out, and this really impacted how the dollar then started to trade. We didn't exactly see the dollar benefit from risk haven flows in this idea that the election is actually going to be tighter, but we actually saw it more of a reversal of this kind of this blue sweep narrative that was driving dollar weakness prior. So we almost saw FX markets reset, and that's how we kind of started this morning's session. And ever since, we've been toying with the idea of, is it going to be a Biden presidency, and is fiscal stimulus going to be blocked by a GOP Senate? Everything's tight, everything's to play for. And in FX markets, everything's actually trading quite mixed and quite flat against the dollar at the moment.
Simon, Brian Cheung here. Great to speak with you. What was really interesting to watch last night, especially as you mentioned the changing developments in Florida last night, was really what was happening in the yuan market, offshore yuan, in addition to the Mexican peso. It looked like they were really the US dollar getting a lot of steam against those currencies, as it may have been the possibility, at least that markets are pricing in, of a Trump victory. A lot of those gains now being reversed, with the dollar now losing some steam against both of those currencies respectively. What do you think was to glean from those market actions and the sensitivity broadly in those markets as these kind of election results continue to pour in?
Yeah, I think what's quite a clear decisive area within currency markets is the dollar's trading very mixed in the G10 space. It's struggling to find generally broad direction, whether it's going to be kind of a cyclical positive for global growth. Why is this not filtering into higher euro dollar? But it's more clean cut in emerging markets. As you say, the idea of a Trump victory coming back into scope, it really started to nail Chinese yuan, Mexican peso, trade relations started to become a kind of a problem again. These aren't necessarily completely negated by a Biden presidency. So these aren't exactly, we're not going to start talking about massive rallies in the Mexican peso and the yuan either. But the idea of this kind of, are we going back to an uncertain trade outlook at a time where the global economic outlook is actually very tentative as well? This didn't kind of bode favourably for emerging markets, and it set the tone on top of that we were actually going to start seeing kind of prolonged uncertainty, no fiscal stimulus from the world's largest economy in the interim. And markets within the emerging markets, currencies within the emerging market space will continue having to look to China for growth in the interim, because the reason why emerging markets are actually very sensitive to this US political outcome is because fiscal policy is highly constrained in areas like South Africa, in areas like India. We're not seeing double-digit fiscal deficits like we're seeing in the G10 space. So it needs to find growth externally. And the idea that you're not getting this big fiscal stimulus pump to this global growth outlook from the US, then that kind of hampered the emerging market space. We're starting to see that reverse somewhat now, because we potentially will see the initial COVID stimulus relief package come through under Biden, but we're not also seeing this massive risk-on rally from the idea that we're going to get kind of prolonged fiscal support from the US.
Simon, we have a lot of big name multinational CEOs that watch this program every day. What's their top trade? What should they be telling their trading desks to help them hedge moves in the US dollar over the next few days?
I think the general kind of takeaway point of this is that nothing should be taken as a given. I feel weird saying it so late into 2020 that we should actually start to hedge exposure, because 2020 has taught us one thing, and that's we don't know what's coming. And I've taken so many calls from journalists prior to the election saying to me, it's a done deal. We're seeing polls be so heavily pointing in one direction, and I just had to remind them, it's not 2021 yet. Don't take this stuff for granted. The volatility is still there. The uncertainty is still there. Given how close the kind of the presidential votes actually panning out in these kind of democratic wall states, we're most likely going to see recounts being kind of suggested there. We're likely going to see court battles over the next few weeks. This again, even if markets are going to take this presidential outcome as a given, it isn't. And then you've got the idea of, is the Senate race actually going to have to spill over into this January runoff? And this, again, has massive repercussions for not just that COVID relief fiscal bill, but the supplementary fiscal relief bill under the Biden presidency or under the Trump presidency. We just don't know how this is going to pan out at this moment in time.
All right. Simon Harvey, FX market analyst with Monex. Simon, thanks so much for joining the program. Great to get your thoughts.
Thank you.